Welcome to Podkey Daily News, your fast brief on markets, conflict, technology, and public risk. Washington is widening the economic perimeter around Iran, while uncertainty over Hormuz keeps energy markets on edge. The effects now run from Gulf shipping lanes to household budgets inside Iran. The U.S. is expanding sanctions pressure beyond Iran itself, targeting foreign banks, companies, vessels, countries, and individuals that help Tehran export oil, move money, support missile work, or run cyber operations. Treasury's campaign, referred to in reports as Operation Economic Outcast, named more than 60 entities, people, and vessels. The immediate message is directed at Iran's commercial partners. Continued engagement could bring U.S. penalties. Officials have publicly called this an economic D-Day, though the initial move functions largely as a warning and carries no fixed enforcement timetable. China, Iran's largest trading partner, was not immediately sanctioned. That restraint reflects the stakes. Cutting major Chinese institutions from the dollar system could bring retaliation, including restrictions on critical mineral exports, and create wider financial disruption. Watch whether Washington turns the warning into enforcement against large third-country institutions and whether Iran follows through on threats toward Gulf interests or oil shipping. The Strait of Hormuz remains the central energy uncertainty. U.S. officials put crude flows at roughly 8 to 9 million barrels a day, while independent trackers estimate 2 to 6 million. Ships running dark at night, partial cargoes, and differing tracking assumptions explain much of that gap. Brent has held around $90 to $92 a barrel, far below wartime peaks, signaling that markets do not yet see an immediate severe shortage. Gulf pipeline investment and U.S. Navy escorts have reduced some exposure, though the route remains highly vulnerable to escalation. Inside Iran, years of sanctions have already translated into currency collapse, double-digit inflation, power cuts, unemployment, and steep food and medicine costs. Reports cite a currency rate near 2 million to the dollar, unaffordable meat, and people relying on credit or illegal purchases for basics such as insulin. The policy question is increasingly stark. Added pressure may sharpen demands for political change, while ordinary people carry the immediate economic burden and authorities retain tools for repression. The U.S. is moving ahead with 50% tariffs on about $20 billion of Canadian goods after last-minute talks collapsed. Autos and parts sit at the center of the dispute. That tranche equals roughly 5% of Canada's annual exports to the United States. Canada says it will retaliate dollar for dollar beginning September 8. The conflict also widens the political divide over trade. Prime Minister Mark Carney has contrasted long-term partnerships with America's short-term transactional approach, while the U.S. average import tariff has risen above 11%. For businesses, the next watch point is supply chain exposure in North American manufacturing, especially auto production, where tariffs can quickly compound across borders. AI's investment boom is widening. NVIDIA is moving beyond chips toward developing and distributing open-weight models that companies can inspect and customize, using its strength across chips, servers, and data centers. The strategic backdrop is competition with China's lower-cost, customizable models. Alibaba plans to raise more than $10 billion for AI infrastructure and chatbots, while SoftBank is preparing a bond issue above $6 billion for AI commitments, including OpenAI-related projects. Shein also plans to direct IPO proceeds toward data analytics and AI. The spending wave is fueling a central investor question: how much revenue and profit will emerge from this enormous capital commitment? Private equity growth funds are also drawing money again. Fundraising climbed about 36% in the first half of the year, compared with roughly 20% growth for other private equity strategies, as lower private company valuations and AI successes draw pension and endowment capital. In U.S. hiring, a proposed $100,000 H-1B visa fee would sharply raise the cost of bringing in skilled foreign professionals. The proposal is in a 30-day public comment period and would affect technology, finance, and employers recruiting international graduates. Britain has transferred classified blueprints for Storm Shadow and Scalp-type long-range cruise missiles to Ukraine, enabling domestic production rather than exclusive reliance on Allied stockpiles. The move signals confidence in Ukraine's ability to safeguard sensitive technology. It could also deepen Kiev's emerging capacity across long-range drones, cruise missiles, and ballistic systems. Analysts see particular significance in ballistic capability because Russia has limited capacity to intercept such strikes. Watch production speed, Russia's response, and whether attacks nearer Moscow alter the public and political calculus inside Russia. In eastern Congo, an Ebola outbreak is described as the fastest growing on record, averaging about 90 confirmed cases a day during its first 3 months. Distrust has become a major operational threat, with attacks on volunteers and convoys, destroyed ambulances, and disrupted treatment and burial work. Authorities are leaning on community and traditional leaders to rebuild trust. Containment depends as much on local cooperation as medical capacity. Near Reno, the Hawk Fire has grown beyond 15,000 acres. Containment has reached about 27%, yet 73% of the perimeter remains uncontrolled, with tens of thousands evacuated and roughly 40,000 people under warnings. More than 900 personnel from 15 states, Australia, and New Zealand are deployed. Extreme dryness and wind leave officials focused on unpredictable ember jumps. That's the brief from Podkey Daily News. Keep an eye on enforcement around Iran, oil flows through Hormuz, and the policy choices reshaping trade and technology. This episode was generated by Podkey. Create your own at podkey.fm.